Markets are gripped by the warnings from the White House. Liquidity is the key issue. So we're seeing spikes in volatility. Chris, good morning to you. Likewise, liquidity is evaporating. How gripped in fear are these markets? Good morning.
Oh, good morning. Look, fear is driving everything right now. I mean, it is all we talk about. I think more liquidity concerns around the emerging markets than some of the developed markets. As we look at where our customers are actually placing their dollars. So we talked about it. There's so much caution and concern and weariness of overall markets. That we talked about earlier on Bloomberg. It seems like to me, and what our customers out here in Singapore and our office in Hong Kong is that we're about 3 or 4 weeks ahead of where the U.S. is in terms of kind of dealing with the disease outbreak. Because I've seen personally just over the last kind of week plus is kind of people coming more back to the offices, out and about in terms of public, as where the U.S. and Europe are now kind of in scramble mode in terms of what's going on. And this fear of the unknown is really kind of stoking the overall volatilities in global markets that we've seen at a scale that we've never seen previously over the last couple of weeks.
And Chris, we're seeing a lot of firefighting from the Fed when it comes to the repo markets. We put together a graphic that shows the amount of liquidity and amount of transactions that went on the way. The New York Fed announcing that it would increase the maximum size of its daily overnight operations to $175 billion, and that would last until April 13, and that's up from $150 billion, which was just announced on Monday. What's going to come next for the Fed, do you think? I mean, they've only got so much they can do with the rates. Is there anything else they can pull out from their toolbox?
Yeah. Look, they're running out of ammunition in their standard kind of toolbox, and it's not just the Fed. It's central banks around the world. But I do think they are pumping a lot of stimulus, into the economy to kind of help slow this offset in demand that we see globally. We see different stimulus packages coming out from different governments in terms of, we just saw something from Australia. We have some ECB's meeting later today. Then also the Fed, on the 18th, they're probably going to cut rates again. All these different things, small business loans to help kind of prop up the economy where it's at. And I think if we can kind of get some sense of calm over the next 3 or 4 weeks, I think this could actually lead to a rebound rather quickly in terms of where these stocks have fallen to over the last just couple week period across the board realistically.